All right. Hello, Facebook world. Welcome to Financial Strategies Group and our page. If you did not know, today is National Insurance Day. So I have a very special guest, Will Lemanski, with me from Meiers, and I always get the L1 wrong. I want to say Lamborghini.
No.
Lombardini Lemanski um,
Yeah,
Insurance. And so I'm going to let him start us off with telling him a little bit about himself. And then from there, I'm going to do a little Q&A with him and ask him some questions. And be sure to chime in if you have any questions. If we're not able to answer them while we're on this live broadcast, we'll definitely go back through at the end and hit up some of those questions. So I'll let you take it from here. Will, tell us a little bit about yourself.
sure. So I've been in the business a little over 20 years now. I own ML&L Insurance in East Lansing for the last 11 years. My background, I'm fourth generation agent. Um, Unique for me is I came from claims. So I started in the insurance business and claims in Detroit Metro, doing anything from home fires to auto claims to lawsuits to injuries, all that type of stuff, auto thefts, all those type of things. So
All the
kind of
juicy
sharpened
stuff.
my teeth on that. Um, Came to Lansing and did no fault claims, which we'll talk about later. So like what's unique to Michigan is our auto insurance. It's unlike anything else in the nation. And I did those claims from the small stuff to like catastrophic,
Right.
quadriplegics, paraplegics, head injuries to neck sprains and all that stuff. And been here at the agency since 2016, and yeah, just I as far as me, I come from claims, so that's kind of my world. I love using real world examples because with insurance it's tough. I mean, it's a piece of paper and it's not a physical
Right.
product, so I try to make it real life examples, for people.
Right. You don't feel that value until you really need it.
Yeah, that's for sure.
Yeah. And you and your beautiful wife Lisa work together. So you guys kind
Yep,
of tag team the ownership of your
yep.
agency.
Yep, and Lisa, she didn't start in insurance, but she got into insurance, and she worked as a commercial underwriter for about 8 years. And then when we took over the agency, she came aboard, so she does all the marketing, HR, ops type stuff, and then I sit here on the sales side trying to keep clients happy and things like that.
Wonderful. Yin and yang going on there.
That's right.
So let's go ahead and start with one of the larger topics. The buzz that's on everybody's mind is inflation. And I know that this affects insurance when it comes to a few different angles. Can you go ahead and talk a little bit about that and why inflation should matter to us when it comes to our insurance?
Yeah, so I mean, the insurance world doesn't live in a bubble. It's a reflection of the world. So if car parts are going up and labor's going up, it costs more to fix cars. And when it costs more to fix cars, well, insurance premiums go up because, what was I don't even know the stats, but let's say an average car deer claim 2, 3, 4, 5 years ago, if that was $2,000, let's say it's probably 150% times that or more. Well,
Right, right,
it's not like there's less deer out there. So, I mean,
right.
and that's just one example. Somebody, however many claims that happens, if that goes up 150%, insurance premiums are going to rise. And
Right.
we have really kind of seen that. I mean, we're independent, so we work with a lot of different companies, but I've seen that across the board. A lot of insurance carriers have really struggled in the last few years, even making money off of auto insurance. Well, what that does is if for every dollar they get, they're spending $1.10, they
Right.
can't continue to do that.
Right.
So companies will adjust rates as time goes on. They see inflation too, and so I think we're really going to start to see that on as I'm just talking about auto insurance here.
Right.
Um, and insurance companies pay people too. They have employees, so
Right.
if they have to find new talent, pay what was maybe 20 bucks. I'm just coming up with an example. 20 bucks an hour is now 25.
Yeah.
That all leads to the bottom line. So I think for sure we are seeing that. I'm even seeing companies like put that in their messaging too. Like,
Right.
hey, by the way, this is what we're going to see.
Yeah.
And You know, in a perfect world, insurance companies don't like to play the game of spiking rates up and down, right?
To
We
go
don't like
gradual.
that. Yeah, clients don't like it. So, they're trying to figure things out like, we know we need to be here. We don't need to do it in 1 year. So maybe they gradually get there. But
Right.
I'm certainly seeing that.
Okay.
Um, on the home end, it's kind of even a bigger issue. Um, so we insure everything at replacement cost. Okay.
Right.
So
Right.
you buy a home for whatever, $300,000.
Yep.
That's not how much you insure your home for. What it comes down to is what's the square footage of your home, how many bathrooms you got, et cetera, et cetera.
Mm-hmm.
So you could buy a home for 300,000 and you could be insuring it for 600,000 because
Yeah.
that's the cost to remove the debris, rebuild it like it was.
Right.
I actually had a client today asking me, why are we insuring it so much? Because he bought this house for like 800,000 bucks, and
Right.
we were insuring it for like 2 million bucks, which is he's got a high value home, obviously.
Right. Right.
The flip argument of that, and people always think about that with market values.
Yes.
Let's say you bought a little cottage on Lake Michigan, had a
Yep.
beautiful view, and let's say you spent $3 million on that.
Yep.
You gonna insure a 500 square foot home for 3 million bucks? No,
Right.
you're gonna insure that for 150,000 or whatever the heck that is, right?
Right. Because you're not insuring the land, you're just insuring the home.
Exactly. You're not insuring a view in a setting.
Yeah.
But so anyways, I think we're certainly seeing that, and with the cost of construction labor, materials, what was once, a $300,000 home is probably now 350, 375,
Right.
400,000.
Yep.
What's happening on that end, which is kind of interesting on the home insurance market, is companies realize this too. So they have that's called inflationary like changes to policies.
Okay.
So if you insure a home for, I'm just coming up with an easy example, $100,000 today,
Yes.
every year, if you look at it 10 years later, it could be 140 or whatever. The company will always do a little inflationary amount.
Okay.
Now companies are increasing that a ton because they
Okay.
know homes insured here, we need to
Mhm.
be here.
Right.
They might be putting it up 6 or 7%
Okay.
now today, whereas before it was 1%.
So does that alleviate the like urgency that we should feel to have our home insurance policies reviewed? Or should we not depend on the insurance company to just automatically do that and make sure we're being proactive and reaching out, to our insurance carrier and making sure that is happening and that's all set and it's at the pace that we would like it to be?
I mean, that's a great question because it's difficult to know. Um,
Mhm.
a lot of these companies have replacement cost estimators. So
Yeah.
let's say you bought a home 5 years ago and you insured it for 200,000 or whatever. There's an inflationary amount that goes up. Sometimes those amounts can be a little bit higher, sometimes lower.
Mhm.
So it's really difficult to answer that. If it were me, and what I've done on my own policy is I've double checked it.
Yeah.
Okay. What companies do too, and what pretty much every client of ours has is there's a couple different endorsements on a home policy that will add more coverage.
Okay.
So let's say again, home's insured at 300,000 and you insured it 2 years ago, and let's say it burns down and it's now 350,000 to
Mhm.
rebuild it. Companies will call it increased cost endorsement, extended replacement cost, something to that effect, where
Right.
they'll take that 300,000 and they might add 25%. They
Okay.
might add 50%, whatever that number is, dependent upon the carrier. And that's kind of that CYA.
Yep. Yeah.
So everybody should have that on their policy, number one.
Okay.
Um, Step beyond that's what's called guaranteed home replacement costs, where um, that home is now 500,000 to rebuild.
Yep.
You'd be fine.
Okay.
The thing with that, though, the biggest thing I would say is if you do a bunch of upgrades to your home or like remodeling, and you forget to tell your insurance company, you could have a problem with that
Okay.
because you're not using that. You're not supposed to underinsure your home to
Right.
use
Right.
that endorsement to add 100,000 more.
Right.
It's for things just like what's going on now, where you had a 1,500 square foot home, you insured it at 100%, what it should be. You had 2 bathrooms, you insured 2 bathrooms. You know,
Right.
you're fine in a scenario like that, but um, there are some agents too who are insuring things at 80% years ago.
Yeah.
It's tough for me to kind of, guess on that. But if it were me, I'd tell everybody, review how much you got your home insured at.
Yeah. That makes sense. I mean, because we are in, especially when it comes to homes. I mean, I think the price of homes is even outpacing the general rate of inflation. And
Yeah.
so even if they keep up with those inflationary numbers, the prices of homes are pretty well beyond that at this point.
Yeah, and I mean, again, it's a similar thing to what I said on the auto. Is it's not just how much you have your home insured for,
Yeah.
and we're seeing home premiums increase too, hopefully gradual over time. But
Right.
what was $20,000 siding job years back is now 30,000.
Right.
Well,
Absolutely.
what happens to we had a really bad year last year as far as wind and hail in the
Yeah.
Lansing area, and you know probably 5 years I'm just coming up with a number here, but five
Yeah.
years ago that catastrophic loss would have been much less.
Right.
So
Right.
all of that just adds and kind of feeds to this beast of more claims being paid, higher costs.
Yeah.
Carriers see it too, and they just you know when I started, this is kind of funny, when I started in insurance, my home that I bought was insured for about 200,000. This is like
Hmm.
16 years ago.
Yeah.
$300 a year was my home insurance premium.
Right.
You can't get a home for 300. I mean,
Yeah.
now,
Yeah.
I mean, again, there's a lot of factors. 800 to
Right.
1,000 ain't that bad right now.
No.
So,
No. So bottom line is don't rely on it just being there. Take ownership into your own hands, double check, ask questions, and review your policy.
exactly. And probably the biggest thing I'd say is if you've done any remodeling, absolutely. That should be a trigger to, you know, you need to call today, not
Yeah.
tomorrow. You
So
know.
will you define remodeling a little bit? I mean, is it new floors? Is it, I mean, obviously like paint wouldn't count, but is it anything that like adding that half bath or
Yeah.
finishing the basement or like how big would you say that it needs to be in order to be qualified as home remodeling?
Yeah, I think if you're adding on square footage, if you're upgrading anything. So, I mean, if you've got old carpet and you're just replacing it with carpet, that's not a remodel. But
Right.
if you're taking your countertops from, laminate or whatever to granite, yes.
Okay.
If you're making if your bathroom is now all tiled and stuff like that, before it was just kind of one of those how do I put it, like a shell type of
Right.
a thing. If you're doing upgrades, I think is a big thing. Because
Okay.
we do get people who are like, "Hey, I just replaced my sliding glass door." Well, do you replace with a sliding glass door? Yeah, I mean
Right. Right.
it's not changing it, but yeah,
Yeah.
upgrades would probably be the good way to put that.
Okay. Perfect. So a little bit more on the home insurance front, and then we'll move a little bit more to auto. So when it comes to home insurance, what are some things that people forget? I know that you had like mentioned dogs. What are some of the other check marks besides the replacement value that should be in our minds as we evaluate that policy?
Yeah, so I guess maybe things that I'm seeing is insurance companies are asking a lot more questions now about what people have. So like I'm seeing just kind of across the board them asking more about trampolines. Do you have a trampoline? Is there a fence around it? Like the gates or whatever you call it.
Yeah, the
Um,
net thing.
yeah, the net. Some companies don't even allow trampolines. So it just depends upon the insurance carrier. Um, Another thing we're seeing is dogs. I don't know what the deal is, but like we've seen more insurance companies asking about people's dogs. I'd say probably in the last year, because dog bite claims are just really becoming a much bigger issue.
Right.
Um, Interesting, not no, not interesting, but dog bite claims are a little weird. They're where like let's say you're getting a car accident, okay, or let's say
Right.
somebody. Well, let's make change it. Let's say somebody trips and falls on your property.
Yeah.
Sometimes there's arguments that insurance companies can make Was Brittany negligent or not? Was I negligent? Well, it just snowed, Brittany. Didn't you know that? They can make arguments to kind of fight that liability, right?
Mhm.
When you're dealing with dog bite claims, it doesn't matter. It's called absolute liability. I believe that's what it's called. So what that means is whatever. You have a neighborhood kid jumps over your fence, gets in my backyard, is poking my dog in the face, and gets
Right.
bit. It doesn't matter.
Yeah.
I'm liable,
Right.
period.
Yeah.
So, it then comes down to it's not an issue of arguing these things, right?
Right.
An issue of damages.
Yeah.
I had a claim 2 years ago where somebody was walking down the street with their dog on a leash and they were on the public sidewalk and
Mhm.
somebody didn't have the dog leashed. Surprise, surprise, right?
Right.
This dog comes out, starts fighting with her dog. She's screaming, trying to get them off. The owner comes out of his house and tries getting him, apart. He
Right.
gets bit by our insured's dog. This guy then sues our
I-
insured. Like, give me a break. She's walking on a public sidewalk.
Right.
Mind your
Right.
business. He, put me on
Right.
that jury, please. But like, this is the stuff that happens.
Yeah.
The other thing too is, I say with dogs is, at least what I've seen in the last 20 some years is the invisible fences. So what people do is they have a dog, and they put up an invisible fence and they just think everything's fine. Those
Right.
dogs get through, bite people, boom, you got a claim.
Right.
I think I did a speech, a chat on this a couple weeks ago, and I think the average dog bite claim in Michigan was somewhere between 40 to 50,000.
Wow.
Isn't that crazy?
That is crazy. That is
So
crazy.
I think companies are certainly asking a lot more of that now.
Right. Well, and no wonder those claims are going up now as well. If you know that you got bit and there's $40,000 or $50,000 in it for you, that's
Yeah.
you're
Well,
going to be more inclined to make the claim, right?
that's the funny thing is inflation happens on liability claims too.
Right. Right.
So how much more is it?
Yeah.
I don't know. If I'm assuming medical costs go up, if medical
Right.
costs go up because of injuries, well, the claims are probably going to go up too. So
Right. Right.
yeah,
Well, I should say I don't say that to like minimize the impact of a dog bite on somebody. I know that they can be very severe and very, very damaging and traumatizing. Absolutely. I'm just, if it makes it worth your time more, right? To do the formal complaint and follow through with the formalities when there's the larger check at the end.
Yeah. So, but I think what I'm seeing from a lot of carriers, they want to know what kind of breed it is. And some companies, if you do have a higher risk breed, they will either surcharge or they won't write it at all. And it depends. Some companies have different things with breeds. So, one carrier might see some like a chow, let's say, as a higher risk.
Right.
Other carriers don't.
Right.
Some carriers, if you have that higher risk dog, they require you to have a physical fence. Some carriers don't. So it just depends.
Yeah.
So,
well, I guess that kind of brings me to a point I was writing down while you were talking as well. This kind of derails, the track that we had planned on being on for conversation, but I think it brings to light, though, the importance of working with an insurance agent who's an independent insurance agent. Can you talk a little bit about that and the importance of working with an independent insurance agent and what the differences are?
Yeah. So, I mean, we're self-employed, right? I'm not an employee of an insurance company. I hate the word middleman, but that's somewhat what we are.
Yeah.
We review somebody's information. I take it to one of our 8 carriers and see who has the best fit.
Yeah.
And if as time goes on, that client isn't happy with that one carrier because of whatever reason, we have the ability to take that, move it to another carrier and tell people, hey, this is what you should do, or hey, this is what you shouldn't do.
Right.
I think the nice thing for us is I'm not beholden to the insurance company. We have relationships with them, certainly, and long-term relationships. And, we don't work with carriers that aren't reputable, obviously.
Right. Right.
But, kind of our client is the customer.
Yeah.
and somewhat to the insurance company. But yeah, I think people like options,
Yeah.
and I love options, and we give people options, and so
Right.
besides just, hey, here's our main carrier that I work with, and here's the program.
Right. Well, I think it also gives flexibility as well. If you have a home that has a unique feature, not every insurance company loves that. Or if you have a certain breed of dog, or any of those needs, if you're working with an independent agent who has several different options, it leaves more room for A, your needs to be met, and then B, for them to be met in a cost-effective way.
Yeah, I mean, a good example of that is I had a neighbor of mine who we reviewed his insurance a couple weeks back, and he's got a wood stove in his pole barn. Well,
Hmm.
some insurance companies don't allow wood stoves in pole barns.
Yeah.
So because he has that, we had to put him with a company that allowed that.
Yeah.
So,
Yeah. Absolutely.
and we see it much, much more like the flexibility, I'd say, on the commercial lines end,
Mm.
where, we can place the cyber liability here, we can place the work comp here, we can place this
Yeah.
here. So it's more of a puzzle to put together, so to speak.
Yeah, absolutely. Absolutely. Awesome. All right. Well, and then it kind of brings us around, I guess, to, it was a hot topic a couple years ago. We haven't heard a ton about it super recently, because I think there's been a lot of other things going on that have captured our attention as a society, and especially in Michigan. But the concept of the no fault reform, what has that looked like? How has that played out? Has it surprised you? Has it kind of been as you expected it to be?
Yeah, I know. It's like, it was funny when it was all coming July of 2020. That's when, the pandemic hit, and it was just like, I remember thinking like no fault reform was going to be everything. Then the pandemic hit, and you're like, whatever, no fault reform. Let's just deal with it. But I mean, what I'm seeing, like, with our clients and really with everybody in the state, most people are keeping unlimited. It depends on the numbers you look at, but ballpark 80% of the people are keeping unlimited.
Mhm.
The people who are opting out, excluding entirely, mostly are senior citizens who are on Medicare.
Okay.
We're seeing a very, very small, like, let's say you're 40 years old and you have qualified health care, like health insurance that covers auto accidents.
Yeah.
We're not seeing a lot of people excluded at all on that, very small numbers. Um,
Okay.
so I think it's been pretty good, though. I mean, it gives people options. Most people are keeping unlimited because I just hung up with a client a little bit ago who has a commercial policy. They
Yep.
have a fleet of 9 vehicles and a number of employees, and they have unlimited medical. It's a little different on commercial, but it's,
Yep.
it's about $100 less a car. So it's like $800. And she's like, I'll keep
Right.
unlimited. Why go to 500,000 for $800?
Yep.
So
The liability is too great compared to the cost savings at this point.
exactly. So I think a lot of people are seeing that, where, going down to the lower tier, does $200 make sense? For some people, it does.
Mhm.
Most of the people who I talk to are like, it's not worth it. So
Yeah. Yeah.
um,
Is that what you expected, or is that kind of surprising to the industry?
it's kind of what I expected. Everybody's kind of always, it always just seems like when you have the conversation that I kind of thought it was crazy that everything hit at once, but it was fun counseling people. Like, a lot
Yeah.
of people wanted to know my opinion on things, and I'm like, well, this is what I do. This is what I would do.
Right.
You tell me what you want, but um, I kind of thought that. I
Yeah.
think I could see some senior citizens opt out with Medicare just because they don't. It's kind of depressing, but I mean, like, I've had a number of like 75-year-olds, 80-year-olds who say, well, if I get hurt in an auto accident, I'm older anyway. It's not like I have the rest of my life. And you're kind of, it's
Yeah.
sad, but it's like, I get it.
Yeah.
Versus if you're 20
Yeah.
and you've got 250,000 for the rest of your life,
Right.
bigger deal. So I
Yeah.
know, but that's, I'd say one interesting thing I've seen is umbrella policies. I was interviewed by the Detroit Free Press like 6 months ago or so, and they were talking about how there are more umbrella policies being purchased.
Mm-hmm.
And I won't get into it, but the chances of being sued now and having higher amounts requested and sued
Mm-hmm.
against or whatever, it's much more likely now that somebody's going to come after you and want a lot more money than they did before.
Yeah.
I won't get into why because it'll take too long, but we saw a lot of people because of that buying umbrellas.
Okay.
In our agency in 2020, I think we had triple the amount of umbrellas sold that year. Last year is 150%
Mm-hmm.
more. So we saw a lot more people buying higher limits for sure.
Yeah. Yeah. Well, I believe we purchased our first umbrella policy under you guys, and I don't even remember the exact reasoning, but I just remember the conversation and like the risk and reward situation.
Yeah.
It's not that great of an or that high of an investment, but if you need it, you really need it. So
Yeah, but a lot of the stuff is still kind of pending with no fault reform. Like every insurance carrier, as this stuff came out, was like, we're gonna have higher liability claims. We're gonna have higher liability claims. They knew it.
Yeah.
We haven't really seen that as much yet, just because it takes a while, and 3-year statute of limitations on bodily injury claims. So I mean, it's gonna take.
Well, 2 years seems like a long time, but when it comes to policy change and how that plays out and all of those things, I mean, we're probably looking closer to 5 to 10 years until you actually see how the trend is going to go.
One thing too with COVID that was interesting is people weren't meeting in court. People weren't settling claims. So, a lot of these cases got pushed back.
Right.
So, what's going to happen with that? But yeah, I think, plaintiffs' attorneys, it's their job to collect more money and make the arguments to collect more money.
Yeah.
And they're going to be making those arguments if they can.
Yeah, absolutely. Absolutely. Is there anything else on National Insurance Day, Will, that you would like to leave us with? Any advice? I know we talked a little bit about if you update your home at all, review your policy with inflation. If you have a dog, anything like that, like review is kind of what I'm hearing here.
Yeah, I think the one thing I can say is like with no fault reform and with like home values, insurance is complicated.
Yeah.
It's not a simple product. It's not
right.
like buying a gallon of milk.
Right.
Just like, investing is complicated. Just like the law is complicated. Taxes are complicated.
Yeah.
So, I would just say, whoever you are, find an individual that you know and trust and work with. Yeah. And if they treat you right and you like them, stay with them. That's one of the first questions I always ask people is why are you checking around?
Right.
And they're like, well, I like my agent. And it's like, well, then stay with them.
Right.
I mean, if it's an issue of you're not getting along with them or they're not treating you right or what, I get it, but if all you're wanting to do is save $20, I mean, it's not worth it. Right.
Right. Cause it's going to fluctuate anyways.
Exactly.
Yeah. So. Yeah, absolutely. Well, I think one of, for me, whether it's, my CPA or my financial advisor or, my insurance agent or anything like that, if I'm on the fence about something, even a doctor, what would you do? Right. Like, I think I've asked you that several times do what you would do for yourself. Cause you know more than I do. And, you always are willing to take the time and teach and explain, but sometimes at the end of the day, it's expertise and experience that we just rely on when we hire these types of professionals in our lives.
Exactly. And I think what the nice thing is try to have somebody that's honest with you too. I think in our world, sometimes agents are worried that they feel that if they tell somebody you should do this, that everybody thinks we're upselling stuff. Like, sometimes we're not. We're just trying to tell people what we think.
Right.
I mean, I'm not going to, go out and buy a steak dinner because I sell someone a $20 endorsement. Okay.
Right. Yeah.
It's just what's doing best for the customer. And I don't know. I always appreciate that with who I work with is honesty. And maybe they're even giving me an answer I don't necessarily like.
Yeah.
But if it's the truth and it's what they think.
Yeah.
Is what it is, right?
And I feel really strongly that if you upsell or if you product push, you might be adding to your book of business. But if you turn down when it's right to turn down business or tell someone they don't need something when they don't need it, and you recommend when you need to recommend, that multiplies your business really quickly, right? Because you're winning good faith and you're actually caring about people and not just
Yeah.
writing the product.
Well, and that's what we found with no fault reform. You know, when we talk to people about the differences, they said, you know what, I'm really not as concerned to save $100. I'd rather have the coverage.
Absolutely.
So.
Absolutely. Well, thank you, Will, for your time. Again, Will with MLL Insurance. And if you want to review your insurance claim, Will is a great resource. We use him for that. We have a couple other independent insurance agents that we have relationships with and we trust. So please feel free to reach out if you need a recommendation. But we always recommend going the independent route. That's the philosophy behind our business. And we certainly encourage that, kind of across the board with professions. I think it just gives flexibility and a better experience in a lot of different ways. So thank you, Will. I appreciate your time this afternoon. And I'm sure this won't be the last time we see your face here.
Yep. You're welcome. Have a great day.
Thanks. You too.